Doing good. Well, actually trying to recover off of a pretty fun weekend that we just had at the Trade Ideas Summit, right, Andy?
Absolutely. It's great to see you, Scott, and the gang.
Yeah.
Man, what a great event. And hopefully you guys were able to catch it on live stream. That was a lot of fun. Most
Yeah.
of us have survived.
Well,
Great time.
myself and Brian, I'm sorry, myself and Jamie and Brad were riding Lime scooters 2:30 in the morning down through downtown streets with no cars. That was fun. But it was great. A couple of you came and came up and said hello. That was great. Yeah, Andy's since still in one piece. Andy was tested
They were right in
Friday night for sure, as was I. But it was a great event nonetheless, and Scott has a lot to do with all that. So a great event, went off really well, and looking forward to next year already. So with that said, and again, like Andy said, if you need a link to watch it, a couple of great speakers in there. Dr. Steenbrett, JC. JC had a great presentation, which is very timely, I might add, with the technical analysis that he provided. And then, of course, Brian Shannon, a good friend who's got some great ideas on how to use some additional VWAP indicators. But it's neither here nor there. Catch the link if you can, and let's get right into it, what we're going to talk about, because we do have some stuff to talk about. The old disclaimer, just a reminder, everything you see in here today, please don't construe it as financial advice. We are not registered investment advisors. If you need financial advice tailored to you or your family, you got to seek out the guys who are professional and took all the proper tests. That's not us. We're a software as a service provider. Again, this is the test week's coming up next week, but during our normal week, our schedule is kind of as follows. You know, Barry Anderson opens up the live trading room for Trade Ideas, and it's free. And there's about 500 people on average in there, with a handful of great co-moderators, I would call them, good traders. But Barry runs the room, does a great job, demonstrates the technology, helps people with questions as well on the platform. But a great hunting pack. And again, I'll just remind you, it's free. There's a lot of rooms out there that are great, but you still got to pay $79, $89 a month. We don't ask that here. It's part of the ecosystem of Trade Ideas. So join whenever you want. It's free, and he does a great job down there. But beyond that, we have the afternoon webinars, which you're hearing now. They're all typically at 2 p.m. Eastern Time, Monday through Thursday. I helped Jamie. Actually, we didn't have one for yesterday, but normally on Monday we have Jamie. Myself today, the Trade of the Week is our theme, and Andy helps me. And tomorrow, Brad and Dan come out from under the shadows and talk about what's coming around the corner with the new platform versions. And then Andy creates some always good content related to the day on Thursdays at the Trading Studio. Then on Friday, we actually have an open forum, 11 to 2 Eastern. 3 hours of open communication to come in, and we share our desktop and we share cloud links. You can give us your link and we'll help you work on it. Whatever we need to do, you guys set the agenda for those Friday webinars. And then we have TI University. We no longer do one-on-ones. It's just too hard, too big, not efficient enough. So we have group training sessions now that we call Trade Ideas University. And starts on Monday and finishes up on Thursday with the advanced classes. I just did the 201 class this morning with Andy's help, and I'll be helping Andy tomorrow do his 301 class, and then so on and so forth. So lots of ways in which you guys can pull up a chair and get the information you're looking for, the ideas, the answers, whatever you're looking for. A lot of opportunities throughout every week here at Trade Ideas. All right, what's going on over there? It's so funny. Video links for after hours. Oh, got it. Yeah, we might have some video links from our event, but let's continue on here. My Man and Machine, I was happy. Did you catch, Andy, did you catch Brett, Dr. Brett?
Oh, yes.
About Man and Machine?
I sure did. Absolutely.
Oh, yeah, it's good to have company with Dr. Brett, reminding people that I think he even cited studies, that shows, humans with a machine will clean up with just a machine all the time. So the machine does a great job of curating the information we want to disseminate and work from, but ultimately the human still is the final discretionary decision maker. Yes, David, he was great. And I'll tell you what, I was real excited about, we keep getting divergence here because we had such a good weekend. I'm really looking forward to Dr. Brett Steenbarger's next book coming out because, we've talked about getting rid of the ego and shedding the ego in trading. There's no place at all for the ego in trading. And of course, that's what they talk about in meditation classes, or even he's taking it a step further. He's going out on a limb and he's going to call it spirituality in trading. And I'm really looking forward to some of the stuff he pulls together for that book. But nonetheless, he was in good company, or I was in good company with him when we talk about man and machine. Combined technology. It's not just the machine that does it, it's the human being that helps curate and make it all happen. All right. Let's get into today's agenda. We've got a big market recap to discuss, and we've got some stuff to talk about. And a little bit of holiday recap. Not a whole lot going on in the AI today and yesterday. We've got the trade of the week. We'll deal with that. Some thoughts there as well. And then, since I really feel I'm going to tie it all together after the market recap here, that the winds are changing. And I've even got some confidence now with J.C. Paredes behind me with his presentation over the weekend. I agree with everything he said. But what I want to do is I want to pull a chapter from our ebook and really put it to practice and show its relevance. And I've got a couple of neat things I think we will show there. All right. So I'm just looking at the questions. They're kind of active, but unless there's something I need to take a look at, let's move on to the market recap. Now I've got the chart's kind of big here, and I'm going to start with S&P, SPY. There we go. I'm going to spend a little time here today because there is so much going on, and I want to maybe go back a couple of weeks when we were talking about this. And remember, guys, these orange lines, they've been here forever. I didn't just pop them in here today, so there's going to be, again, relevance with these orange lines that have been here for a while. I didn't just put them in today. So as we were, discussing the market back here, I said we pulled back and we discussed the possibility of building a higher base camp and moving higher off that orange pivot line. Well, the following day we had a little rejection wick with no color, and it was a perfect doji, and that was kind of a head scratcher. And I think that was my webinar day when I saw that, and I said it's a little concerning. I would like to have seen a nice base build and maybe some green candles and an attempt to move higher. Well, that was just kind of a foreshadowing of the next day, which we see opened and didn't even look back. And then this was I think one of the biggest relative volume days. The market opens up, and the SPY and the spiders and the NASDAQ Qs, they were doing like 5 times, 5.0 relative volume. And for an ETF to do that and maintain that for the first hour of trading is just almost unheard of. That was very impressive. But this is where everything broke down, in my opinion, guys. Of course, hindsight's 2020, and I'm trying to highlight it here. We were noticing a lot of nervous stocks that weren't following through, and the breadth was really declining. But this failure to bounce after that green candle and then that horrible red stick. I mean, in the first hour and a half of the day, I was thinking, yep, this is it. This is the one that broke the last straw, that broke the back of the bears here, I think. Very unusual volume, a very long trading range, and ending on closing on lows. I'll add as well. I think this is where the bulls lost control of the market right here. So then we had our bounce, our oversold bounce, and what we talked about last week was, I think it was that green candle we had, and I said that's great. Oversold bounces happen all the time. It's the nature of the market. But the rubber is going to start to meet the road. I remember using those words, and we talked about the moving averages crossing down, and it's going to be a giant headwind. I use that word too, a catch net, a headwind. Well, the following day we had another one of the little dojis, no color in the chart, but it couldn't get above that declining 10 period. And then it was on the next day, couldn't get above the declining 10 period. Next day, same story. Next day, yesterday, same story. And then we closed near lows, and then we got the giant mother of all gaps, which doesn't make anything easy for anybody, except maybe, we'll look over here on the right, the intraday day trading pikers. Maybe that was a little easier for them, but for people who were maybe looking for continuation to the downside, or short sellers, it's very frustrating to have it all done overnight and then basically have it retract throughout the day. Couple things of interest. Look at this line right here on my intraday chart. So we gapped down to this line, had a little trouble getting through it, sold off, kind of came back to it, was repelled by it once, came back to it, kind of hung out, and then broke through and then that line also became support intraday here. Again, this line was drawn a long time ago. So my point is showing you this once again, resistance back here, resistance back here. These pivot lines, they stay in perpetuity. They're good forever. I mean, as long as we're in the neighborhood of these price levels, they're going to continue to behave as such. And so we can see really interestingly, on the intraday chart here, how it held, broke through, acted as a base for 45 minutes, popped up, pulled back, and then my 10-period SMA got a hold of it, and then that was it for pretty much the rest of the day. It was just buy the shares back. But look at what happened on this next orange line. Again, I'll draw you back to the daily chart. This orange line was, excuse me, yes, it's this one right here. The first one was I was talking about earlier. So this line, as we come into it intraday, here it is on my 15-minute chart. Look at that. A whole hour was spent trying as hard as they could, the buyers, to get a 15-minute candle to close above that line. And if I back out just a little bit, hey, look what happened yesterday on Monday. We found support off that line. So, guys, this is why I like to draw these horizontal orange lines of major levels of pivot and then overlay them and work together with the moving averages and the price action as well. Okay, today we got ahead of ourselves overnight, and there was really nowhere to go for the market to just, we couldn't follow through this morning. That was the extent of the fear today. Now, nobody can really put a finger on why the market did sell off. It just did. I think it's purely technical at this point. We're just going through the technical gyrations of price action. But again, all bets were off. Everything changed back here on October 10th. We are now in what I believe a sell the rally type of a market until we're proven wrong. But these solid highs last week, declining and staying below this moving average. I've said when stocks are in motion or even an index is in motion, 10-period SMA is going to be the guiding hand that either pushes it down or props it up. Well, it's pushing it down on the daily here, but on the short term today, it kind of held it up on the intraday. But we're right back pretty much where we started yesterday, barring last night's enormous gap. I guess that's all thoughts I had for the Q, the S&P. If we look around, a little different flavor for the most part. The NASDAQ has also been troubled, by the declining 10. It trades above it, but has a hard time closing above it. Same thing again today. It hit it, but closed below the declining 10 period. It's holding up a little bit better than the rest of them, especially when we consider, maybe we look at the Russell 2000, the IWM. Here's another classic example, guys, of price in motion. And momentum stays in momentum as long as that 10-period moving average is touching it 1, 2, 3, 4 days last week, and then Monday and Tuesday they were still well below that. IWM was the one that we were talking about first as it started to roll over as the rest of the market was near highs. So we will continue to kind of watch this one as the canary in the coal mine and see if it precludes any future type of movement. And then the Dow looks pretty similar to what the S&P looked like. So even though we have this giant green candle, we're still net change negative on the day. There was still money given away. I think Andy had a good point. If you use a dot plot graph and you don't show the high and the low and you just show the close as a dot, you wouldn't really be too confused by any of this. It was just another down day. But when we look at the candles, it gets really goofy when we're going down on green candles because of giant gap downs. I don't like giant gap downs and I don't like giant gap ups. I would prefer that the market gives us that opportunity to trade during the bell, but we can't always be beggars and choosers on what we want. Wally has a question. Do you think the market sold off due to the global markets? Yes, that's true. Well, I talked about that a lot last week. Let's look at Italy is hanging by a thread here. Their credit default swaps are getting ready to possibly blow up. And then you got the largest bank and the derivative bank in the world, Deutsche Bank, looking not too great. Lost some area today. Credit Suisse looks even worse. Horrible downtrend, continues lower. ING doesn't look that great either. EWG, which is the German ETF, they're having a hard time. Yeah, Europe's not doing that well, but there's no real big one catalyst, one big news event that we can all wrap our hands around, or one big data point that came out that spooked the market and took the rug out. It's just kind of a slow, not slow always, but it's a technical breakdown, and I think this is exactly what's happening.
Yeah. You have to go back. I don't know how far you have to go back to find a gap down like this. And Wally, you're right. The world markets are definitely going to influence our opening price. But as we kind of discussed, or in my webinar last week, we haven't been that influenced by the world markets. Just for prime example, 6 or 7 weeks ago, we're at all-time highs, and everything else is rolling over, going closer to lows. And so, yeah, I would not expect that big of a gap down based upon price action that we've seen over the last several years, in the world markets. But nonetheless, I'm sure, yeah, that did have an influence on it for sure.
Yeah, this is not one thing that everybody's pointing to as a major catalyst.
No, there was right.
Fed double hiking or something like that.
No.
All right. Well, did you have any other thoughts before I was going to answer Corey's question before I moved on?
No, I agree. I mean, despite the price action we had today, and I'm gonna show you an example using compare count windows and also using Holly. Why did this action may not have been as strong as it appeared? Mm-hmm. In other words, looking at some of the underlying deterioration from, let's face it, the weighting we have in a lot of these indices are really skewed and can make something appear different than what's really happening. But yes, the backdrop for me is still the same. I mean, we're in a downtrend. We're below all our moving averages. Keep breaking. It's broken. It would take a lot to unbreak it.
We haven't seen this, and what I mean by this, I mean the 10 cross below the 50, the 20 cross below the 50. Now we're below the three majors. Still, we're below the 200 too. But when I start seeing this guiding line, this 10 period just guiding the price, I mean, there's definitely a correlation there. And again, I feel like this big red bar here was the break. This was the day that broke the bull's spirits. And then this was confirmation last week. Now, do we need more confirmation? Sure, we always need confirmation. We never have enough confirmation. We could very well bounce right back up and just blow everything up here and saying, and that's it. But that's the way it goes. That's the market. These are just my opinions based on 10, 15,000 hours of observation and price action, and Andy's got the same amount of time. And so it was, again, back to the weekend, it was very comforting to have JC give a wonderful presentation and really confirm everything Andy and I have been talking about ourselves. And so if you get a chance, check that out. Very, very timely for him to come together with his charts because of what we're talking about right here. We might be very close to just right there. That was the day it changed. So I see a question from Corey, and I just wanted to knock it out before I move forward. A couple things. First question is, can you paper trade with the auto trader? Yes, if you have an account with IB. So you have to have an account with IB. Second question.
With one other stipulation, it has to be a funded account. You cannot just open an account. You actually have to fund it.
Okay, thank you for that.
With them the minimum value. I'm not sure how much you'd have to put in there, but it does need to be funded.
Okay, very good point. I'm glad you reminded me of that. Second question, can you auto trade with the M windows? Sure, the M window is just a window with many strategies. When you auto trade, you're selecting the strategies that you want to pick out of that window and turn on to auto. And thirdly, you ask, I see there's a filter for SMA, but not for EMA. We can do EMAs on the charts, but we don't have EMA in our filters. The filters are a giant database, and we went with the most commonly used ones along the way. It's going to take a lot probably to start breaking that open and creating additional filters because everybody has a different liking. And so we can do it on the charts, but the filtering in terms of the data is with simple moving averages. And again, I mean, I'm using the 10-period simple moving average, which we don't have. We have the 8-period simple moving average. So I kind of feel your pain in a way, Corey, that I would like to have a couple of filters too, but it's just not that easy. They're pretty intensive to build. All right, so that is our market recap. Essentially, feels like the winds are changing. We could always use some more confirmation. What do we need to see? We need to see the price continue to not be able to close above this declining 10-period moving average. If we post a close above that, well, then it takes a little bit of wind out of my conviction that we have changed. Then I'll start watching the 20. It's always possible the 20 could be a second backstop. But what the bears do want to see is continued price action lower without any closes above this declining 10 period. If we are in fact moving with this volume and in a new direction, this should be the guiding hand that moves it. If it fails, it'll take a little wind out of my sails, like I said, but I'll look at the 20 period coming down right behind it. All right, so that was that segment. And
I'm going to add one note to that, Steve, because Waleed brought up the good point. He's talking about global markets, and I highlighted that in my webinar last week. And so yes, I think you really need to keep an eye on global markets. If they do not bounce, it's going to be very, very difficult for us to bounce and start heading back toward highs again. If you do see a turnaround, and I shared that global market watcher with people with all the ETFs in it, that may be something you want to have up now, each day. And my opinion is it's dragging. It's a global economy, and as strong as we've been, there's no way we continue to just keep power through new highs after 9-10 years with all the other ones rolling over to 52-week lows. It's just
and they're watching us when we sneeze. The Europe catches cold, and if we're starting to falter, that's not going to help them at all. I see a question from John. Is there an indicator that can be turned on for previous open or closes? I think I know what you mean. I mean, we have the filter of change from open and close. What you want to do is maybe go to the configuration
talking about charts?
Well, I'm guessing that he's talking about filters.
Okay.
Is there an indicator that can be turned? Are you talking about the charts, John? Okay. Thank you. I don't think so. Now, that's not to say that you can't request it. We get a lot of new requests, things we don't think about, but if more people ask about it, it becomes a priority. So you're welcome to email info@trade-ideas.com and say, it'd be really nice if I could see on the charts a way to pop an indicator in there, turn it on or off, that does show me what you're asking for, the previous open or previous closes. Okay, that looks like it makes sense with you. All right, so we still got more to get to. Andy, did you want to talk a little bit about Holly today? Not much to talk about, but
no, I'll hit on it really quick because I know you have more stuff, and we got a lot of questions coming in, so I'll just take it and hit it on it briefly if you don't mind. All right, give you a little rest there. Tuesdays are a big day for Steve. He does a lot of talking, so he'll take any break he can get. All right, so Holly, not much happened today. I was hoping, for a better market as far as it's really tough in big gaps, and of course this was a big gap down day in the spiders that we're looking at. And Holly didn't do bad, but Holly Neo, of course, when you have volatility, Holly has a good chance, guys. If you're trading the AI, Holly Neo has risk parameters and volatility parameters set where it's more risky. So you may see some bigger, losses in there, but you're going to see some really big, up days when the market conditions present itself. But nonetheless, I think what was tricky today about the market was the big gap down, and then we rolled over, in the first 45 minutes and went lower. A little weak attempt there to go to highs and came back and went lower again. So I noticed at the beginning, I'm not going to go through each one of them, but you will notice that a lot of the strategies in the early going were shorts in all three strategies. So that's what was setting up for Holly in the early going. And then, we did finally get a bounce, and you look at the bars here, and it looks pretty good. And I was thinking, if Holly gets long, maybe, things will turn around quick. And Holly did start taking a few longs, but I just noticed they weren't moving with the market. Okay, so I pulled up my compare count, and trust me, I haven't logged off. So this is from early action this morning, and this is our big cap movers. Okay, above 5.4 billion market cap. This is strictly intraday highs and lows, guys. It does have to be doing 3 times normal volume. We don't want to track everything. We want to see what the big moves are doing. And despite looking at this big green bar right here, the majority of the stocks were hitting new lows today, intraday, versus the ones hitting new highs. So to me, on a day, if you typically look at a green bar like this would probably be skewed to the green side, probably 60-40 or close to it. But what that's telling me, it tells me maybe I don't get all that excited about this bounce off these, off this pivot line that we have down here. I'm not going to draw that, but you can kind of see it there in the chart. So anyway, yeah, this is what I wanted to add kind of to the spider market recap, or the market recap, is wait, looking at those green bars, it sure looks pretty. And I'm sure a lot of people out there, wow, I potentially caught a bottom here, buy the dip. I caught it. But when I see numbers like this, it makes me think, okay, how strong was that move? Well, only time will tell, but it's not the kind of numbers you want to see if you're real bullish and you're thinking, hey, maybe a bottom has been made here. So first I wanted to point that out, that maybe the conditions here and the strength that you saw in the intraday price action wasn't as it appeared. And like I said, I'm not going to talk a whole lot about Holly today. And some days it's great to talk about, but it was just one of those days where, like I said, she didn't do bad, and she pretty much kind of flatted. These two did pretty well. Let's see. Let's get this back on Holly Grail. I think this was, the big winner. I think 364 based upon my.
You want to elaborate on that?
Parameters?
Yeah, thanks.
Yeah. What the reason you're seeing these numbers versus what you may see in the channel bar, we've talked about this a couple of times, but I know we need to keep talking about it, is we now have, if you go to options, you can choose AI trade size. And what I've done here, these are pretty self-explanatory. How many dollars per trade, how many shares per trade. But then you see risk based on stop loss. And what that's telling you is any value that you put in this space, okay, based upon the stop loss, that's the share size it's going to take. So in other words, I cannot lose more than $200 in any one trade. That's why when you look at a lot of these stop outs, you're going to see, $200 on the stop losses on a lot of them, because it will not let you lose more than $200. It's going to stop you out. So based upon and of course you could go with 100, you can go with 500, but based upon 200, not losing any more than 200 on any one trade, this would be the risk off money that you made today, profits. Okay, and I'm pretty sure Holly 2.0, I'll flip over there real quick and show you, it's pretty close to the same, I think. 231, a little bit lower. And interesting, like I said, Neo is the feral child, man. He gets after it, and you can see the histogram there. Got as high as almost about 800, and then just came back in the final hour. So this one is volatile from what we've seen so far.
So to help answer Steve's question is, there's two different ways in which you're showing there. On the channel bar, what does it mean when it says Holly was up 45 cents on the day? What does that 45 cents mean?
Okay. An easy way to understand that is if you bought one share. So let me get back on Grail here. All right. So she was up 45 cents. So if you bought one share of every one of her alerts that she called out today, whether they're short or long, so I guess I should say if you took a position with one share in the same direction, you would have made 45 cents on one share. So basically, anytime you add a zero to your share size, you add a zero to the profit. So 10 shares would be $4.50. 100 shares would be $45. 1,000 shares would be $450. Is that right? Yeah. So that's basically all it is saying. It's just basically one share. If you calculate one share, that's your profits. That's why I like so much when we introduce this trade size. Once again, now you can come in. Let's just do it. Let's put it in here and let's calculate. Let's go crazy. Let's say we got a lot of. We bought 20,000 shares. Let's just do $20,000. That's not big money, but dollars. So $20,000. And now you could say you would have made 3,682. All right. So there's different ways for you to input your risk, how much you want to risk on, per trade, per shares, or once again, per how much you'd want to lose on trade. So if you want to take a position, what I love about this one, it implies the stop loss. Okay, so it calculates the difference between the entry and the stop loss, and figures out how many shares it can buy you without you losing more than $200 if it goes to the stop price. So this is actually the way Michael Noss does it with his auto trading, and I think it's a very good idea, because Shares is very dangerous because, you know, maybe a $3 stock in there and it may be a $100 stock in there. So you got to be careful with the shares. Dollar size, I can understand, you know, putting a certain amount of dollars, but I think this one so far has really tickled my fancy.
That's the one that Michael Noss uses on his risk management for auto trading. So it's the same idea, the same concept as the auto trading, which will all come together when that solidifies more.
Exactly. But once again, you guys can go over and look at the trades on your own. I thought this was a pretty interesting one. You talk about catching, you know, a bottom there, but you'll notice, guys, when we're taking positions like this, there's a reason for it. We're not just catching falling knives or trying to pick bottoms. Well, I guess technically we are, but look at the relative volume in this stock today. Okay, so if there ever is a time to try to catch a bottom, catch those big up moves on the big volume bars, you know, and of course we had some nice follow through, and of course you can see the risk. Of course, it did come back too, ugly. That's definitely a good risk on trade based upon what I have in there. Did it not adjust when I went back to 200? No, I didn't do it. I didn't save. There you go. So for a risking $200, that's a nice above, you know, almost a 3-to-1 ratio there, risk off. One thing I did like, there wasn't, on a day like today, there wasn't a whole lot of trades. And you know what that tells me? It tells me because of the gap down, a lot of the setups were just out of whack, because a lot of our setups are based upon daily charts. Okay, and then when you get a huge gap down, of course, it could just really mess them up. Mess up the setups.
Yep, and that's probably something Holly learned on her own by trial and error in the past.
Yep.
All right, cool.
All right, Steve, I think that's it.
Okay, let me take it back here. All right, welcome back. So I think the next thing
Before we move on, Steve, maybe he asked, Holly is automated. Not yet, Stevie. So,
not yet, but it's coming. Keep an eye out on our promotional and marketing emails. There is going to be a November 15th is going to be the day that we're going to start taking deposits on a limited amount. I believe it's 1,100 users to come into the first batch of live Holly automated trading. We're going to do it slowly. And so more information will be coming out, but I think the pertinent information is November 15th. And it's an $1,100 reserve spot, and I think $100 is going to be the deposit. Something along those lines. Don't quote me on everything to the penny, but that's kind of the idea. Kind of like the way Tesla does it. Reserve your spot and know that you'll be part of the initial group when we get there.
But guys, listen, you've been you know, pre-warned, and as long as you have premium before that November 15th deadline, you're grandfathered in, and it's free. So there's no excuses. I'm jotting down names so in case you ever come back around in December or January. But yeah, so as long as you have it by November 15th, you're grandfathered, and there will be no charge. All right, sorry, Steve. I didn't mean to interrupt.
That's all right. No, that's an announcement that has to get out. All right. So where we are now is on the trade of the week, and I just wanted to say the last two trades of the week. The one before this, we said go to cash. Basically, all bets were off. The market broke. October 10th, didn't want any part of that broken mess. So we called cash last week. You know, cash can be a position in periods of uncertainty and high volatility. Cash can be a position. And then going into last week, this week, you know, we started to talk about the possibility of, well, we don't want to just call along when the market is looking so horribly weak and like it wants to go short, and our mandate is not to call short sells, and we don't want to call along. Well, that just pretty much backs us into what we've done at least once or twice over the last year and a half, 2 years, is call the inverse ETF of the market going down, which is SDS. So that was our trade of the week. Now, for those that were really watching it to the penny, it did not make anything easy about it. I mean, it nestled up close to it yesterday, and then we closed with a little bounce, and so the SDS has retreated. And I put a tweet out there that said, you know, this feels like we're going to have a big gap down tomorrow, because it just felt like that, and we did. And what that did was probably a lot of people looked at that giant gap and said, I'm not going to chase SDS now. And that's the misfortunate part of giant gaps, is that sometimes they can, crush our game plan for trading. But, I don't blame anybody for not chasing it, because you probably only would have had a little bit of time before it started to go against you if you hadn't bought it yesterday. And there was no reason to think about buying yesterday because it didn't trigger. So it was just a real quagmire of a setup. Now, that being said, look at how those wicks down here are spiking. I showed you that earlier in the S&P. Well, they're doing it right at our buy level. So, sometimes the second mouse gets the cheese, is a joke that I like to say. And if somebody wanted to, I wouldn't fault them for doing that. Basically a second 2.0 entry opportunity. But the point I want to drive home is that Andy and I, a lot of times we like to sleep well at night, knowing that we're giving out, decent ideas and not throwing out, horrible ideas, throwing caution to the wind. And I think we really feel like we saved a lot of trouble, angst, possibly money, bad trades by keeping you guys out of trouble the last couple of weeks. And I'm kind of happy about that, because I do like to sleep well at night. So that's really all I had to say about the trade of the week, SDS this week. It didn't trigger yesterday. It would have been nice if it did. Then we could have had a nice gap up and a nice profit on the open, but it gapped way up and forced you to chase if you did. If you didn't, you had an opportunity to get long again here. But I still feel, guys, I still feel like there's more downside to this market. We could come up again tomorrow. We could trade through that declining 10 period and then reverse in the last hour, put a big old topping tail wick, and then we're still under the repression of the 10 period moving average sloping down. All right, so that's a quick segment on that. So what I want to do is, staying on the theme of I think things are changing. We've got this ebook that we talk a lot about, 5 chapters and some ideas to do when buy the frickin' dip market stops working. And everything I've been saying today, might not be working very well going forward. So I just want to kind of highlight, this is the content that I wrote, and I want to give you, after we go through this, a real working example of how to apply this. And so, selling the rips. Okay, so that's obviously the opposite of buy the dip. When buy the dip no longer works, you have to start selling the rips. Because, if you start waiting for things to be oversold and then shorting when they're oversold, you're probably going to be happy for a little while, then you're going to get bounced out, and then you're going to get stopped out, and you're going to get upset because you were trading correctly. Your timing of the downtrend just wasn't right. So, what's the inverse of buying a dip? Well, it's selling a rip. Whatever your time frame of a daily chart or 15-minute chart, it doesn't really matter. That's the current that's underlying. So just a quick look over here. Some concepts. The buy the dip strategy has been working for years, and at some point, buy the dip will no longer become buy the dip will have to become sell the rip. If you want to survive a change in the market, when this day arrives, we must be conscious. And trust me, guys, change is the only constant in trading. Nothing works forever. You're constantly having to retool and adjust. And the key is learning that early, that it's not working and I need to adjust. The problem is not adhering to that, and you start beating your head against the wall saying, why isn't this working anymore? And that doesn't last very long. So, because human nature, we don't turn on a dime. We're conditioned. That's why some of these rallies in a toppy market, after we've had a big couple of breaks, these rallies are so severe because the conditioned out there, the crowd mentality is to keep coming in and do what's been working for the last 7-8 years. But that's not going to work forever. And so half the battle, as I said, is recognizing and accepting that it's not working and there's a time for change. So over here on the right side is an example I gave of Holly, which was a great example of Holly, the AI setting, an example of an intraday chart here, selling off, not shorting down here on the lows, waiting for the bounce back up midday, and then hammering it. That's the concept we're looking for. So let me minimize this, and I've got a little prepared deal here. Some of you have seen this scan that I have called Bouncers. Bouncers is an interesting little scan that looks to take out yesterday's lows and then bounce back up into the range today. If I can find an early example today, I'm going through the history, and there's a lot of them in here. But I'm going to make a point. All right, so let's try a couple of these. Here's the idea. Here's what a good bouncer looks like. Okay, guys, the stock is down below yesterday's low and then trades back through yesterday's low. Well, the idea is in an up market, stocks will drift and take out yesterday's lows. Here's another great example. All right, there's yesterday's red candle. Today's green candle, we were lower below it, but then we traded back up into the range. Essentially, this arrow is going to trigger, the event is going to trigger, which, by the way, is called crossing above resistance, and resistance in this case is yesterday's low. So in an up market, we get this all the time. Stocks trade below, they try and shake the rug below yesterday's low, and the short sellers get stopped out because there's no follow through to the downside. And then it pushes back up. Yeah, John says, can we see these filters real quick? It's nothing more than, I'm going to share something with you too at the end, don't worry. Crossing above resistance, again, the trade ideas uses yesterday's low as resistance, and the congestion of today's price is also calculated in there. But as far as filters go, it's just average daily volume. We're looking at yesterday's range. That's one of the big filters in here. Position in previous day's range. 1 is just above yesterday's low, and 10 is no more than 10% above yesterday's low. So that's the sweet spot we're looking to trigger these particular alerts. And then I've got time of day in here, 30 minutes. I've got time of day in here, 30 minutes, that says don't show me this alert until 30 minutes expires. And so it's a real simple 45 minutes, slow moving, not too fast, breathe. The stocks have to breathe. And if they take out yesterday's low and don't follow through, they trade back up into yesterday's range. So with that said, let's go back to where we are in this market. And I want to show you something. That's kind of a buying the dip strategy, essentially. What if we go back to live, and let's just do a little survey here. Let's just do a little scientific experiment. Let's back test this. Keep my settings as they are. In the advanced section, I'm only going to go back 20 days because this is about 20 days of data here that we have. And we will. By the way, if anybody wants to get this bouncers, I will share them both at the end of the presentation for sure. But what we're going to do is look and see that this isn't working anymore. Okay, so we're going to simulate buy going back 20 days. What happens if we were to buy every single time the stock took out yesterday's lows and then traded back through yesterday's lows into yesterday's range? We would have 1,800 trades that really isn't returning crap. The top line here is the net before commissions. And look at all the commissions and slippage. This is not a good strategy in the last 20 days. Okay, so there's our set point. Buying the dip hasn't really worked very well on an intraday kind of a scan, which is what this is looking for. Stocks that should be bouncing. Hasn't been working. So I mentioned in that ebook that we just kind of quickly went through, we have something that's called the flip button. And just like we want to flip buy the dip into sell the rip, we can take this strategy. Let's duplicate it so we have a second window and make this our target window now. Go into configure, and we're going to flip it. That button right here at the bottom right, I'm clicking. Now it's inverted everything, and I'm going to accept those changes. And what I'm going to do is I'm going to go back into configure, and I'm going to immediately change this. I'm going to call this not bouncers, but toppers. So now in a down market, we're going to look for the exact opposite. Stocks that took out yesterday's high didn't follow through, and they're falling back down into yesterday's range. If you can get a signal on that and short sell that, that could be a decent intraday strategy, and it ties completely together with what I was talking about in that ebook, flipping your mind and your strategies and your methods upside down, from buy the rip to sell the rip, buy the dip to sell the rip. Let's see how this back test strategy. Going to simulate sell this time.
Are you doing the same 20 days?
Mm-hmm. Okay. Should be. Let me check though. Yeah, I believe so. I'll run it again just to make sure. But nonetheless, what we saw there, thank you, 20 days, simulate sell, because this is now a 45 minutes sell, it's a short sell. So our back tester is giving you guys empirical data and evidence right here that what we were talking about is working. These trades are actually working in the last 20 days. So it's nice to have that back tester sometimes to show us that that is in fact the case. And then, we could even take it a step further. Now, guys, if you haven't been to the 301 class tomorrow that Andy is going to host. He does something called optimization. And we can just start. We got, what, 1,500 trades here. Let's see if we can improve this just a little bit. We'll delve into this. Okay, so a price, interesting. Price, that's a lot of price intervals. Let's do an interval of 10. And notice, look at what happens here above $89, guys. We start to lose. The green, we start to get red, diminishing returns. So let's make our maximum price be no more than $89.99. And we'll set that and say OK. And then the time of day. What time of day does this work best? Ooh, look at this. This time of day is not good. And I just happen to like this definitely more in the early part of the day. You know, Kunal did a great breakdown and also in our summit speech talking about the time of day. The consolidations and patterns, they're going to work better in the first half of the day. Once you get to the second half of the day, that's where things are tired and they start to give up. And so I'm going to be more inclined to use the early part of this day. So now I'm going to say 7 o'clock start time, my time. 9:29 finish time, because I don't want to hit any of this midday stuff, and I can let the rest of the day just sort itself out. All we need is a good chunk. Let's go ahead and do it. We're going to run it again, and we're going to start at 7 and finish at 9:30. So I will right click and back test since I made a change, and we're going to start at 7, and we're going to stop at 9:30 my time. We're going to cut out a lot of trades, but we're going to be left with some good ones. Simulate sell, because this is toppers. We're trying to invert what was working earlier in the market, but no longer. And we didn't really do too much. We cut out a lot of the trades, but everything's still pretty much the same. But we definitely cut out a lot of trades. Now, there's more optimization that can go in the other filters tab, but we'll save that for another day. As a matter of fact, Jamie talks about this in 401 on Thursday's Trade Ideas University class. So, as promised, these are kind of, raw alerts, and I'll give you both of these alerts as they're configured right here. If you want to continue to backtest them and try and optimize them on your own stuff, that's great. So I'll be happy to give you the starting point right here. So we'll work on bouncers first, and what I'm doing, guys, is I'm opening up the chat window. You can go to webinar, bouncers, and then control paste. That cloud link will get you the bouncers, and then the flipped upside down version, which I renamed toppers, is going to be also saved and shared. And we'll call this one toppers. Control paste. Now, real quickly before we turn it back to Scott, I'm going to close that because I've got it on my cloud. I want to show you, if you're not aware, there's a lot of pre-configured scans for those that are looking for scans. If you go over here to my channel bar, if I scroll down to the bottom, notice the channel 4 icon here. This is nothing more than a palette derived for you guys to take and use. You might notice Extreme Volume High-Low Pro. We talk about that one a lot. That one's in there. You might also notice bouncers. That one is in there. And I think top reversal is the another way of me calling toppers. So here's kind of the same iteration of what we just did. But for those that weren't aware, there's some good stuff in here that you can find. I don't believe we have the PDF in the handout, but if you need a help on some descriptions of these, if anybody does decide to go in, you can email us at info@trade-ideas.com, and we'll be happy to send you a PDF copy of what those descriptions are, whether they're quick scalps or more swing trade, or kind of what they're looking for. Yes, there's stuff in there for swing trading, Nir. Squeeze Me is a good one that's on that page. But if you'd like, Nir, you can, again, email us and we can send you that PDF, which I don't have handy at the moment, but that'll give you can read through. And the ones that say swing trading and the ones that say, day trading, you can separate those at your own will. Yeah, info, anybody that wants that info, that detailed PDF that I just showed you for channel 4 and the descriptions of all the pre-configured alerts on there, send an email to info@trade-ideas.com. You can even put my name in there so people know what I'm talking about. I'll be happy to send that to you and attach it. All right. Anything else, Andy?
No. Well, I did want to address one of a question that Nir had. I think I know the answer. I just want to make sure, because we're going to be coming out with a big announcement real soon over the test drive about this November deadline. Okay, and under my Steve, so I don't want to. He asked that is it just for Brokerage Plus, or is it also for the AI future, integration that goes with Brokerage Plus? And I was under the assumption that you do, if you signed up with premium before that deadline, right, it's all free. Am I correct on that? Maybe Scott can even verify something like that.
Yeah, we need to verify that.
Yeah, we need to verify that. I'm not going to go out on a limb and say that. I think I know the answer, but I'm going to wait till we make the announcement, guys. So if you want to wait until you hear the announcement before you sign up to premium.
And hey, before Scott comes in, Nir, thank you very much. Nir dropped he dropped a link, and that link is actually the same PDF that I was talking about. And so I put that link in the chat window. It's the third item in there now. So you don't need to email me. You can use that link and use that as your reference guide to the thumbnail descriptions in the channel bar. So thank you for that. Much appreciated, Nir. All right. That's it. So let's go ahead and bring the slides back up and say hello to Scott. And he's got some announcements.
Yeah. Thank you, Steve and Andy. We have a test drive coming up next week. Anyone who is not already a Trade Ideas Premium subscriber should give it a try. It does cost $8, but that gets you full access to all the premium features, and we do have to deal with the exchanges. That's why we collect that. But trade-ideas.com/test drive lets you experience premium trade ideas that includes Brokerage Plus, the AIs, the Holly Neo, Holly 2.0. If you are an interactive brokerage client, you can try out auto trading. We're going to have extra, support sessions, educational stuff going on. Trade-ideas.com/test drive, and it kicks off next Monday on the 29th. Get ready for that. Give it a shot. Share that with your friends. We have had a really successful summit on Saturday. And we have all the videos up right now. So you can see those, watch all the speakers in their entirety at trade-ideas.com/summit video 2018. Just plug in your email and you'll be taken to a location where you can view each segment. You can just click to view each of the segments. It was a really great event. There's a lot of content. Very much worth your time to check out. You should absolutely see Dr. Brett Steinberger's and Brian Shannon's and JC's presentations. We had some panels that got really great. They had really positive reception. There's a mentorship panel that featured Dr. Brett again, and that was a popular one, as well as the active trader panel toward the end of the day. It was also an excellent one as well. So don't miss out. Go ahead and watch those videos. Well, they're available for free. We're going to have a new podcast out tomorrow. It's actually going to be one of the segments from the sessions on Saturday, but we release new podcasts every week. So make sure you search for Trade Ideas Podcast wherever you listen to your podcast and add us as a subscription. That way you get all the new episodes and you can keep up to date. The ebook that we talked about earlier, if you don't have it yet, go to trade-ideas.com/ebook. It's free. It's a great download. You get the PDF download link delivered to your email address after you plug in your email to that page. We have a code this month. If you decide you want to go ahead and get started today with standard or premium, just use fall savings, all caps, for 15% off your first month or year of Trade Ideas. Standard users can also use this to upgrade to premium. So if you just want to get premium today, do it. But do remember that test drive next week is another way to give it a try. Any questions, email us info@trade-ideas.com. You can follow Steve Gomez on Twitter @TodayTrader. Also follow our @TradeIdeas, and we have some other handles out there as well. Facebook.com/TradeIdeasPro is the page to like on Facebook, so you can see updates there and share those with your friends. We will have a recording of this up later on tonight or tomorrow and shoot you over a link with a reminder about how to find that recording. Thanks, Steve. Thanks, Andy. Thanks, everyone, for attending.
Thanks, guys. Thanks, Scott. See you guys Thursday.
All right, thanks. Bye-bye.